All right, guys. Well, welcome and Raleigh. Thanks so much. And Primo is Primo. How about that? I've known Steve for a long time, and actually, I first started learning to trade in San Diego. A lot of Pico, Pacific Coast Stock Exchange guys, and Steve was a specialist there. So I agree with a lot of what Steve was saying. So that was a great presentation, and hope you guys enjoyed it. So I'll come at it from a similar way here. I'm a little bit more technical. I like to get into the technical a little bit, roll up the sleeves, and put it in terms of options. So if that's okay, we'll dive in. I think I can see the general chat, and as I said, if hey Norman, how are you? If you guys have questions or comments that are relevant to whatever topic we're on, go ahead and throw them in, and I'll try to hear them. Okay, guys, sound okay? A couple of people coming in. All right, looks like we're fine. So go ahead and throw them in, and I like to make it interactive. We'll have some fun and make it conversational, not just a boring lecture. So let's roll. And Trading Pub, just confirm that I'm good with sound. I see people coming in, and I'll be on the way here. So kind of a funny clip here. I don't know if the video's okay. Perfect. I don't know if the video is going to play through the presentation here, but we're going to talk about surfing the Elliott Wave and Fib with some options. We recently had a pretty fun trade that we put on. I want to show you how to set up these kind of trades, and look at this idea of Elliott and Fib, which is a little bit more advanced technicals, but maybe I can simplify it for you, break it down, and kind of give you a step-by-step process. And those of you who trade options, you'll find that it's very useful in terms of picking strikes and expiration. So we're going to talk about trying to go for the big, like Frankie and Annette here from Back to the Beach. You remember this cheesy movie from the 80s? But also, guys, I want to talk about hitting singles and doubles, like surfing the bathtub waves. So should be a good combination of the two. And we have a pretty good trade going on right now in gold. I want to show you that one. And this is a setup that I want to teach you here. But before we jump in there, warning, we got to do it, guys. It's risky. Okay, this is a very volatile market. Trading is a skill game. You need to learn to get in there. Don't trade money you can't afford to lose. Not a good idea, because your husband, wife, spouse, boyfriend, girlfriend will be mad at you, number one. And number two, you won't trade well if you're not comfortable with the money that you have at risk. Okay, you got to have a trade plan. And I have been brought up, in the markets, knowing that you always need to think a couple steps ahead. And knowing a couple steps ahead, just like when you play chess, involves knowing how much money you have at risk, right? And if you're not comfortable with that amount of money at risk, you're not going to trade your plan to completion. All right, so that's really, really important. Trade small. Trade with money you're okay if things don't go according to plan, because they often don't go according to plan. You're okay with it, okay, because that's going to give you the freedom to trade your plan to completion. So, all right. So as I mentioned, we're going to be looking at two kinds of wave option surfing strategies here. One, we're going to be looking for the big waves, and two, we're going to try to surf those bathtub waves and little ones in Hawaii. That's actually my wife and I in Hawaii. She is a New Jersey girl. I'll pick on her in a minute. She is more comfortable hanging out in the malls, but I can't believe I got her up on a surfboard in Hawaii on our honeymoon. Kind of funny. So a little bit about me. Again, Raleigh gave me a nice introduction. I am Todd Gordon from TradingAnalysis.com. We have twin boys, Jake and Brody. Their 2-year-old birthday is Saturday. And I know Raleigh is a twin parent as well, so we have that common bond of pure madness in our lives. Met my wife in Hoboken, New Jersey, and was working on Wall Street, and got to include it. I know probably half of you hate me right now, and half of you probably like me, but he was there. He was at the wedding, so it's interesting. We'll find out what happens. Things are heating up in the primaries, so we'll see. Hey, Sam, thanks. That's really nice. So, as Raleigh said, I was an institutional trader. I traded for a hedge fund. I was a senior technical analyst for a big firm on Wall Street, and I left. I wanted to work for myself. I wanted to grow up with my work and see my kids grow up, be part of their lives, and hopefully hand this business over to them someday. So I trade the morning, run the research business, go upstairs, annoy my wife and kids, and sometimes I don't leave the house for 2 or 3 days at a time. It's Probably not all that healthy. So you guys may have seen me. I do get out on once a week. I get up to CNBC. I've done that for 5 or 6 years, and really good with the folks there. And they usually lean on me for the technicals. Maybe you guys have seen me there, and if not, that's fine too. Okay, that's me. I'm a trader. It's all I've ever done. 21 years old. I was trading in San Diego. Actually, it's 22. Trading for a living. I know what a tough game this is, and I'm not somebody who's going to say it's a simple 1, 2, 3 process and you're going to be fine. You know, like Steve said earlier, you've got to make decisions. You need to put the odds in your favor. You're going to get beat up sometimes. Trading is like a boxing match. You never go for the knockout. You try to win the decision in 12 rounds. Sometimes, though, you can look to put on a knockout trade. And I'm going to talk to you about a few of these. And these don't happen very often, but you can put yourselves in the position to get what we'll call a Bigkahuna trade, which is catching that big wave like Frankie from Back to the Beach. So I'm going to show you how to do this. And this doesn't happen all the time. I just want to underline that. But there is actually one happening right now in gold. And I have the trade on. I'll show it to you. So GMCR, you guys remember the buyout for Green Mountain Coffee? Well, we had the trade on. Okay, we bought GMCR calls at 85 cents ahead of the buyout, and I didn't know there was going to be a buyout, but there was very good technical support into this move. So we bought options at 85 cents and got to sell them at 32 bucks. So it was like a 38 100% return. Okay, so I'm going to show you how we did that trade, okay? And again, also show you what's going on in the gold market. So number one, let's just look at the trend of this chart, okay? And everybody is very clear that we're in a major downtrend, okay? Stocks are getting, the GMCR trade is getting killed right now, okay? Or getting roasted. How about that one? However, there is a pretty clean 5-wave Elliott pattern. And Elliott, I understand a lot of people say it's too subjective, it's too difficult. Not really. If you just spend a little bit of time and study it and let me break it down for you here, it's actually quite useful and it can help you set up this cowabunga trade, or what we call the Bigkahuna trade. Okay, so Elliott, I'm sure most of you have heard of it. It's really just rooted in classic Dow theory, right? The grandfather of technical analysis is Charles Dow, and he gave us back in the early part of the 20th century the 3 trends or 3 waves and a good clean trend. Number 1 is accumulation. Number 2 is widespread participation. Number 3 is distribution. So, I mean, this is Charles Dow, the grandfather of Dow Jones Corporation, who told us markets usually advance and sell off in 3 main trend waves. Elliott just took it to the next level and assigned different values, started to look at the corrections, and gave you a catalog of patterns to try to identify to figure out where you are in the market. Does it work all the time? Absolutely not. But it gives you an edge, and it gives you have a plan stepping into the market. That is the most important thing, is to have a plan every single day. These markets are so driven by algos, so driven by high frequency, so competitive now. You have to have a plan. You can't sit down in this chair without any plan and just start buying and selling and hoping things go right. You're going to get crushed. Okay, Elliott gives me a plan for the day. If it doesn't work that day, that's fine. I step back, I close my position, I minimize my risk, and I move aside. You don't revenge trade at the market, and that's what you're likely to do if you don't have a plan for the days. You're likely to get pissed off and if the trade doesn't go right, and revenge trade and then dig yourself into a deeper hole, right? So that's my little 2 cents about Elliott. So a good 5-wave pattern, and I will break this down for you here. Fib support zone held, and I'll show you how to do this. I have a lot to do with you in about 30 minutes. Okay, we held support down into the $40 region. We put the trade on, okay, right after this event. We identified support ahead of time in GMCR. Then what happened is the stock gapped up on poor earnings. I don't know if you guys remember this. This was just in November. So I was like, all right, I've been watching this support zone. The stock gaps up on poor earnings. Time to put the trade on. All we were looking to do was get up to this, what we call the measured move or symmetry off of the earnings gap. Okay, we're just looking to get up just to the $59 region and above. Also, there were rumors out there that GMCR was going to be acquired, and it was all over the internet. Okay, there's no inside information here at all. I promise. There were. I mean, it was a prime takeover candidate. So for all those things, I'm like, okay, let's put the trade on. So here's how you do the Bigkahuna trade, right? And for those of you who are options traders, it's what we call a bear call ladder or a callback spread. So it ties in really well with the Elliott Wave and Fibonacci theories, and I'll show you why. So first trade is you want to sell the 52.5 calls. Now, before I jump in, guys, type in right now. How many of you are trading options? Are you guys? We have a lot of option traders. Or we say yes or no? Okay. Let me know who's trading options. So, and I'm just kind of watching those responses fly by. So, all right, pretty break even. Actually, I would say 61.8% of you are trading options. It's a bad fib joke. Okay. And for all those people who say they can't hear, there's a lot of people can hear right now. Okay, so you might want to restart your webinar software. Okay. First thing you want to do is sell the at the money calls. Okay, so we sold the 52.5 calls for $2.27. So that's a very bearish position if you short calls, right? Okay, we're not done. Then what we're going to do is buy the 55 calls. So we took the proceeds of the 52.5 sale, $2.27, and we spent $1.39 of it on the 55 calls. So the net we still have in our pocket is 88 cents, right? Okay, perfect. We then, and here's the kicker, took that 88 cents and bought the higher calls for 85 cents. So we have a net credit of 3 cents. If you take $2.27 and subtract $1.39, subtract 85 cents, that leaves you 3 cents credit. And that is designed in a very specific way and for a very specific reason. The trade went out to our research customers. We sent it out in SMS. And all in all, it was a net, depending on your fill, a net credit of 3 to 5 cents. So those of you who are on Thinkorswim, this is the analyzed graph here. And this is a P. So the green line here is your profit and loss on the vertical scale. And the horizontal scale is the stock price. So what happens is the stock, if it goes between 54 and 58, you're going to have a loss. Okay, this is a max loss situation. The max loss on this was about $500–600. Okay, the reason we want to put this trade on is, don't forget, GMCR was in a huge downtrend. It's either going to reverse against the support level that we identified, or it's probably going to keep going. And that's the purpose of this trade is, if it keeps going, you want to leave yourself an out. If the stock kept dropping through the 50s, we would have made a very slight profit. This stock could have gone bankrupt and we would have made a slight profit. We get hurt between $55 and $57. We lose about $500 or $600. Once we get above this red mark right here, 60, that's all profit. So we have profit above 60 and below 52. Okay, and remember, this stock was getting crushed. Let me just go back a couple slides. You know, what are the chances it's just going to go sideways after going from 160 to 40? It's either going to 20 or 80, right? And GoPro is another stock that we're looking at like this. If you aren't into options that much, you'd be like, Todd, what are you talking about? I got it. I know. So again, we put the trade on. The stock gaps up to $90. The options go to $31, $32. So it had a pretty good P&L day there, right? So that's the kind of trade we're looking to do here. So we made like 3,600%. So I'm here to tell you, you can catch the Bigkahuna trade every single time. Yeah, right. So you might be saying to yourself, Todd, is your brain waterlogged? No, not really. So as I said, there's 3 trades setting up right now, and I'm going to show you how to do them. Chipotle's one, GoPro, we're in this trade, and gold, we actually just started taking profits on that trade, and I'm going to show you that one. But first, we need to go to surf school, right? And I'm picking on New Jersey. I'm originally from upstate New York, but there are some redeemed qualities in New Jersey. This is actually a Jersey short. I'll go down and surf during the summer. bring my laptop and kind of do some chart work and stuff. So not bad. So before we start doing the Bigkahuna trade, I got to keep it started. All right, we got this Elliott Wave stuff. All right. So here's the 5-wave pattern. We're going up in 1, down in 2, 3, 4, 5. You're looking for same things. Number 1 is your 3 trend waves, 3 advances in the direction of the trend. The second, the 2 interrupting corrective waves, 2 and 4. Okay, and that's pretty simple. But I'll show you how to kind of break this down. So these are the rules for the 5-wave pattern. If you have a good reversal happening here, your first correction can't go more than 100% of the prior trend, or else it's not a correction. It's not a new uptrend, right? You have to do a higher low here. The next rule, same thing. This correction can't go more than 100%. Okay, if a correction goes, I don't know if you can see me on my webcam, if you have a move that goes up and the market corrects more than what was previously gained, then you're not in a correction. You're still in a downtrend. Okay. And I hear a lot of people complaining there. And Joseph says refreshing works for the audio for those of you who are having audio issues. Okay, so the second rule is wave 4 can't go more than 100% of 2, right? You just can't go all the way down here. The last rule is your middle trend wave can't be the shortest. Okay? It can be the middle length, but it can't be the shortest between trend waves 1 and 5. It's got to be longer than at least one of those guys. Those are the 3 rules. And I know there's a lot of rules here. You can take a screenshot of this, and I'm sure we're going to send them the presentation. Take a screenshot of this and just put it up next to your computer. And when you're looking for these setups, you can just refer to that. That's the best way to learn this. I'm going to hit you with this one more time. Byron, good question. What if 4 enters 3? I'm okay with it. Okay, I'm okay with it. And if you're an Elliott Wave guy, there's a very specific reason, and we can get into it if you want, but that's okay if 4 enters 3. Yep. So let me just hit you again. Rule number 1, 2 can't do more than 100% retracement of 1. Okay. Number 2, 4 can't do more than 100% retracement of the prior trend wave, which is wave 3. And wave 3 is never the shortest trend wave. That's it. Those are the 3 rules. Jason, in an impulse, that's the case, but in a diagonal, that is not the case. Those are the 2 kinds of trend waves, a diagonal and an impulse. Yep, I see all the questions coming in. There's 2 kinds of trend waves. There's an impulse and there's a diagonal. And I mean, we can break it out into it. Those of you, if you guys are interested in, and if I have time at the end, I'll definitely give you that distinction. So here's McDonald's, right? You're just looking for the 2 big corrective waves. So there's a pretty good correction here, and there's a pretty good correction here. That's really as simple as you need to get. So that's going to be your 4th wave. That's your 2nd wave, and then you fill in the trend waves around it. There's 1 big old gap in 3, which is very common, and then 1 more 5th wave, and the market reverses. Here's Bed Bath & Beyond, down in 1, up in 2, beautiful drop in 3, correction in 4, and down in 5. Okay. Now, one of the most common questions I get is, well, what about all this stuff in the middle, right? Well, this is this whole idea of looking at charts in multiple time frames. So this is a daily. If you were to get down to like a 4-hour chart or a 2-hour chart, you want to see 5 smaller waves in your trend waves, 1, 3, and 5. And I think you can see 5 waves inside of 3. So there's 1, 2, 3, 4, and 5. Okay. And then you just keep going. You can even do it inside of the smaller waves. So you don't have to get all carried away, but this is just a basic setup. Facebook, super simple example here. Up in 1, big correction there. Where's the other correction? Right there. So that's 4. And then you have 1 more move up in Facebook. I captured this chart, I don't know, in early January, late December. And I'll show you later, we were projecting $120 high in Facebook, and I think it was 120, I don't know, something. It was really close. So before we get into Fib and more Elliott, we need to make this a little bit more objective, right? And if you have that concern, I certainly agree with you. You need to understand the idea of swing waves. Okay, this is basic. If you pick up any basic technical analysis book, you'll see this. A swing wave is just a short-term trend change. You got a high bar with a lower high to the left and a lower high to the right. That's a swing wave high. Swing wave low is a low bar with a higher low to the to the prior in the prior position and a higher low in the following position. Just very basic stuff. I like to then go and figure out whether swing waves are minor or major to determine the significance of them. And I have an indicator built for you that will count it out, basically. If a swing wave high is not exceeded in the 8 bars prior and the 8 bars following, it gets painted with a pink dot, and we're going to consider that a minor swing wave. If it's not exceeded in 13 bars, left or right, it's considered a major, and that gets a blue dot. There are your pink and blue dots. The dots help you pick up the most significant reversals. And the whole purpose of trading, guys, is to identify the end of a correction to onboard yourself with the trade, get on board the trade in anticipation of the next uptrend. You want to buy short-term weakness, which is a correction in a rising market, or you want to sell short-term strength in a larger downtrending market. And if you can identify the end of those corrections, you're ahead of like most traders. So about 80-90% of your trades should just be simply that, to find the end of corrections to get on board the next trend. But there are times where you want to fight the trend and try to trade the other direction, and that's where the Bigkahuna trade comes in that we're talking about here. Okay, so just again, review. Minor swing wave is a swing wave high with 5 bars left, 5 bars right. And I'll go back and forth between 5 and 8 for the minor swing setting, depending on the volatility of the market. Major, I go between 13 and 21 bars, depending on volatility of the market. So you have a low here. It's not exceeded in 13 left, 13 right. That is a major swing wave low right there with the blue dot. All right, so the dots help you identify the start and stop of your correction. So this is Facebook on the daily. Blue dot, there's your correction. Blue dot, there's your correction. I mean, it's that simple. Okay, so that's Elliott, and I know that's I just hit Elliott Wave, pretty hard in like 20 minutes. So if you're a little confused but interested, that's exactly where you need to be. All right, so I'm going fast. I know we're on a tight schedule here. Let's move into Fib. All right, you got it, Gary. 5, 8, 13 based on Fib. Yep, good eyes. Yep. So Fib, good segue in there for me, Gary. Fib and Elliott, and Fib and trading, this is the analogy I like to use, right? So let's say you're in Vegas and you're staying at the Bellagio, and you look at the map, you're like, all right, my wife wants to go shopping at the Encore. I'm like, okay, so I got to go this way. And then I know I got to go over the bridge, by the fountain, by the sidewalk with the guys handing out the flyers with the naked ladies on it. If you've been to Vegas, you know what I'm talking about. Up and over. So what you need to do is look at all the twists and turns of your journey and then figure out the distance of the entire journey by using this little key at the bottom. And that helps you add up the total expected distance, and then you can plan accordingly. So Fib is exactly that to Elliott Wave. It helps you determine how long each twist and turn of your trade is going to be, and that will help you plan accordingly, not only in price, but also in time. If you're an options trader, it helps you plan your expirations as well as the ideal strike prices. So Fib is your little key to the Elliott Wave map. All right, so let's get into some Fib. All right, and I'm going to hit you hard with this stuff. This is one of the most advanced Fib tools, but I think you guys are ready for it. So a Fib projection. There's 3 kinds of Fib tools: retracements, extensions, and projections. I'm showing you projections. Another stupid joke I have is if I do a presentation and I say, give me a show of hands, how many of you believe Fibonacci doesn't work? And usually 38% of you say it works and 61.8% of you say it doesn't work. And then everyone kind of gives me a sympathetic laugh. The reason, and then I'll come back and I'll say, I agree with you. How many of you are only using Fibonacci retracements? And if you're just using retracements, Fib doesn't work. You need to use more tools to identify a good zone of resistance or support that you can expect price to respect. So Fib projections is that third tool of Fib. So what we're looking to do is figure out how far a market will trend, how far a trend wave will move. And your trend waves are going to 1, 3, and 5. The way you're going to do this is by looking at the distance traveled in the prior trend wave. So whatever the distance was up in 1, you're going to multiply it by the key Fib ratios. and then project it up from the end of the correction. That is going to tell you how far you think the trend wave will last. And remember, your trend wave needs 5 smaller waves. So once you can fit 5 waves into one of your fib projections, usually the 1618, the 2, the 2618, you have a pretty good idea that that trend is about to change. Those of you who are doing debit spreads, if you're buying at the money calls and looking for a good strike on the upside to sell to create your debit spread, fib projections are wonderful for it. Okay, so let me just review this quickly. First step is to find a good little uptrend. You're then looking for a setback correction. Once you start to move higher a little bit, you're like, okay, maybe the correction's over. I'm going to look back at the distance traveled here, slice it up by my fib ratios, and then project it higher. And I'll show you this on live charts. This is a 3-click process, right? So you're going to click once, twice, 3 times, and then your fib projections will unfold on the top side. Okay, and let me see if I can press my luck here. And I know I have a lot of windows open. Oh, toss is a performance problem. Awesome. No. Looks like I think this one is struggling. Looks like I won't be able to share my gold trade. Okay. So that's that. Okay. I was going to show it to you on Thinkorswim, but let me see. I might have to. It's like 16 gigs of RAM isn't enough, is it? Check. All right, that's fine. Let me just keep pushing through. So how do you pick the end of a 5-wave move? All right, how do you start setting up these cowabunga trades? Here's how you do it. You are going to take the distance traveled in your first push up, and it could be a push down, and then project it up from the end of your correction. Generally, a market will stop between 161 and the 261% projection. Okay, so that is going to mean if this move was 10 bucks, you're going to look for resistance in this trend wave up around $16 to $26 of rally to the upside in the stock. Okay. Step number 2 is you're going to do the same tool, but rather than just measure 1 up from 2, you're going to measure 1 through 3 up from 4. So you want to measure this distance up, and then you want to measure 1 through 3 up. This one, you're going to look for the 38 to the 61% projection. And those are all your fib projections. And you're looking for clustering to figure out where the top is likely to be. All right. And I'm not doing this all the time, as I said, but there's some times, you know, that counter trend trading is part and should be part of your arsenal. So let's do it in McDonald's. We're going to go distance of 1, project it up from the end of your first correction, and there is 200 to 2618. Okay, so that's your first upside projection. Step number 2 is now you're going to do distances of 1 through 3 up from 4. And that is going to give you between the 38 and 61% projection. Can you see the zone forming of where you think the top in McDonald's will be? Right there. So you're getting a clustering of fib projections to predict a top in McDonald's, and you guys know that came pretty close. All right, Facebook. Here we go. Let's do Facebook. We looked at this example. We're going to do wave 1, blue dot to blue dot, project it up from the end of your first correction, which is here, and there you go. There's your fib projections. Let me go step 2, which is going to be waves 1 through 3 up from the end of the correction, and there's 38, 618, and 100%. So altogether, you have kind of a clustering of resistance here in Facebook. And what I'll do is even break it down further and just say, well, I think these two guys are fairly close. And this is a bit of a judgment call here. It's not, you know, it's not a scientific or a calculation here. There's clustering here around the 120 area, and then there's clustering up here around 140. And again, I didn't cherry pick these examples, but what was the top in Facebook? 120, whatever it is. It was right inside of the zone, and then Facebook is down to $100 now. So all together, guys, we just did Elliott and Fib in light speed, but I like to give you the heavy stuff here. I don't like to make it super simple and just, tell you you're going to learn it in 5 minutes. It takes some work. So when we look at this GMCR trade back from 30 minutes ago, this should look much different to you now, right? Because you have one, there's your first big correction right here. That's two, nice big gap, which often happens in the third wave. And then you get a nice sideways guy here in wave 4, down into fib support. So in what I just taught you in the last 20 minutes, you now say, you know what? That GMCR long actually makes a little bit more sense now, right? So gold is a Bigkahuna trade that we have on with research customers right now, okay? This was the setup that we sent out to our research guys. Here's your first wave down in the gold weekly, up in 2, nice drop in 3, and we've had a huge sideways mess here in gold for a long period of time, down in wave 5. The FIB projections, not shown here, but they were projecting anywhere from $1,000 to $900 low in gold. We did a callback ratio here, which is the Bigkahuna trade. We sent it out. We sold 105 calls, bought twice as many of the 110 calls for a credit of $1. Okay, why would we do that credit? Again, here is the P&L graph at the time. If I'm wrong on gold and gold just keeps getting crushed, see these two lines right here, they're above the 0 mark, we're going to make $200. We're going to make $200 if I'm totally wrong and gold goes into the 90s, the 900s. Where I'm really going to get hurt is if gold just goes sideways at the 110. Okay, if $110, that's the max loss, which is $800 on this trade. That's the max loss. And I'm going to lose money between 106 up to 114. Once we get above 114, I've got unlimited profit. Okay, and I don't know. I can't. Thinkorswim is crashing here. That's great. But I have the live trade on for gold, and we're up pretty good money right now. We just booked half profits on that. So markets have been pretty volatile here. We had the GMCR trade in November. We have a Bigkahuna trade going on in gold. Usually you're only supposed to get 1 or 2 of these a year. So we've got 2 going in like the last 3 or 4 months. So markets are volatile in here. But again, 90% of the time I'm hitting singles and doubles, doing good Elliott and doing good Fib, looking for just vertical spreads, credit spreads, debit spreads, identifying good Fib support in order to sell or in order to buy options, and then match it up with upside Fib projections to sell options to create those spreads. We do credit spreads, we do debit spreads. Fib is wonderful for those of you who are trading options. Okay, so that was a Bigkahuna trade, right? So it's kind of a fun setup. It's not something you're going to look on, you're going to lean on for your bread and butter all day long, but a couple of those a year are really going to help. So that's a bear call ladder. Great from an Elliott Wave point of view. They're good for volatile stocks, bio candidates, heavily crowded trades that are trending, biotechs, earnings plays. So there's times and places for them. It's a pretty fun setup. So again, here's what you just learned, right? Using swing waves, Elliott and Fib, you can trade options in totally counter trend trades. And even if you're dead wrong, you can still make money. That's called being a trader, not leaving yourself an out, right? To just try to bottom pick and buy futures or buy stocks in a market that's just been getting crushed, you're asking for trouble there, right? And the way these set up is you get hurt with this option structure, this particular option structure, if the stock just goes sideways or quiet. And a market that we're going to trade is showing so much volatility here that it's not likely to just stop where, stop a massive decline or massive rally and just go sideways. It's not likely to do that. So it's a good risk reward. So if you're right, you get paid. I've said this enough. I'm not going to beat that one anymore. Counter trend trading should be about 20% of your arsenal. The other 80% should be trend trade. So anticipation, guys, equals performance. I love this quote from Tony Robbins. I think it's pretty good, very applicable to trading. Anticipation is the ultimate power. Losers react, leaders anticipate. And you can remember in the beginning, I said this market is all about having a plan. This is such a sophisticated market, so competitive, so much money to be made or lost here. you've got to have a plan going in. You can't just sit down and just trade haphazardly, or it's going to be rough for you, I can promise. And trust me, I've been through it. A great quote is an expert is somebody who's made all the mistakes there are to be made in a very specific field. I don't know who said that, I forgot. But I've made almost every mistake you can make in this market. So I think the biggest part is having a plan and leaving yourself an out, okay, in this market. Otherwise emotions get the best of you, and then you do something that is going to take a long time to recover from. So got to anticipate. So I do have a course offering if you guys were interested in this and would like to continue on. It's a pretty competitive offering here. Catching the big options trades, how to use Elliott and Fib to not only set up these Bigkahuna trades, but also I go a lot into how to hit those singles and doubles. Like I said, just putting on vertical spreads, debit spreads, credit spreads, just simple little trades. So I'll show you the best trend, counter trend strategies. Become a surfing guru, finally understand the wave principle, learn to use Fib as the GPS in your trading, and I will share all the tools, tips, techniques, strategies for this volatile trading period. So this is for people who, as I've said many times, want to trade with a plan, who want to trade comfortably, don't make every day such an emotional roller coaster. Those of you who like to trade options, I really like to focus in on the options markets to enhance your chart reading skills. Options are not a vehicle that allows you to hide from the trend or determining what the trend of the market is, whether there is a trend or there's not a trend. You need to be a good chart reader, and that's what we're going to focus on to enhance your option trading. Okay, there is no holy grail. Okay, there's only probabilities and being prepared to go to war every single day. Okay, you're going to win some, you're going to lose some. Okay, but you need to retreat when things don't go right, and when things go well, you get paid. So if you can follow a simple set of rules and directions, and if you don't mind doing some work, you got to love working with charts, and you got to love this business. If you trade and enjoy the process, and you do this to enjoy and love the journey, then you will be successful. If you're only trading to make money, it's not going to go well for you. You got to love this. It's not the holy grail. We don't trade FYE for your entertainment. We trade to make money. We trade when the edge is there. Sometimes we're quiet. Sometimes we only trade 2-3 times a week, and sometimes we're very busy, trade 2-3-4 times a day. I won't have you on your yacht with the Wolf of Wall Street by March. This is for people who can make a decision. So as always, we offer 100% money back guarantee. If you're not happy, we'll go ahead and refund it. It's not a big deal. I want only to work with people who are happy, and I only want people saying good things about my work. So if you're not happy, there's no problem giving you money back. If you guys would like to move on this offer, go ahead and go to tradinganalysis.com. That's my website, /pub, P-U-B. Not the bar, but trading pub, of course. So tradinganalysis.com /pub, and here's what you get. This has occurred in January. Okay, we obviously have a very discounted price for you. This is recorded, archived, ready for your viewing right away. So there's nothing to wait on, no mailing. This is not a course that's going to happen in the future. This has already happened, and we actually went through the whole process of setting up the gold trade in that course. So it was 3 hours of content, and then we also traded live for 3 days following. Okay, it was once a week for 3 weeks, 90 minutes. Most of them ran to 2 hours. So you get three recorded trading sessions. So, there's closer to 8 hours of content ready to be viewed and for you to learn. You get a Fibonacci projection calculator. Didn't have time to go into it, but I'll show you what that means. Those of you who don't have Fib tools, I've got something built for you. I'll show you the option strategies, how we select our process in terms of options. I will give you the art of the trade, how to handle your account, risk, and trade management process. There's a positioning tool. I'll show you how to determine your risk profile, how much you want to risk in every trade. I get really, really into it. So again, I didn't have any time to show you that one. Also, you get the swing wave indicators. So those are the purple and blue dots. And again, I want to do some live charts, but I have a backup here on MoneyBack Wave, but it looks like Thinkorswim needs to be restarted. But we have the swing wave indicators built and ready for you. We have them on a bunch of different platforms. So you can just download them and install them, and you'll be good to go. And you can install it multiple times if you have different charting packages. So altogether, guys, well over $1,000 worth of content. 297, nope, not good enough for the pub. How about $97? And we'll do it for 24 hours if you go to tradinganalysis.com/pub. All right, so that is the offer. Here's when the course happened. It was delivered on January 13th, and these are the live trading sessions: January 27th, February 2nd, and February 7th. So it's just hot off the press, ready to be viewed now. Okay, so again, tradinganalysis.com/pub. If you guys, Raleigh, I don't know how we're doing on time, but I'm happy to look at some markets. If you guys have some questions, we can go through. I can restart toss, and we can do some work. Let me know. Sam, what's the difference between
Todd,
catching the wave and? Hey, Raleigh. Yep, I got you.
I was just going to say, Todd, we've got easily 10 minutes left that you can use to address questions, so charts, things of that nature, so that you've
That's
covered
great.
so much information today. Just be good to make sure that people have their key questions addressed.
Absolutely. Yeah, no, that's good. I've heard people say before, for me, it's kind of like drinking from a fire hose, which can't be. I want to make sure you get your money's worth, and I got to throw everything at you. As I said, it's a complex, it's a challenging market, and you got to bring the right tools. So, good question there, Sam. What's the difference between catching the wave course and cracking the code? So, good question there. And Sam's obviously done some of my work in the past. Um, Cracking the code is more focused on Fib and Elliott. That's a more in-depth Elliott course. This is a little bit more geared towards options. It's what we've, I give you what you need to know of Elliott and Fib, and then we focus more on the option stuff in this course. Cracking the code is more about in-depth Elliott stuff. So, what software? Oh yeah, no problem. What software platform do you use to do Elliott? So, I use a platform called MoneyBack. You can do this stuff. You can do this by hand. You don't need any kind of special software. Um, so MoneyBack is going to let you do the Elliott Wave analysis automatically, and it even kind of has the fib ratios programmed in for you. So it's got all the stuff done. It looks like my computer's really slowing down here. So maybe it's not tossed, but looks like my computer's kind of struggling here. So yeah, so that's it. Um, yeah, looks like I'm crashing here. Let's see if we can hold on there. So yeah, guys. So as I said, options are wonderful for the guy who likes to use fib. As I said, a lot of people like to trade too far away from the market. If you guys are selling options, there's a lot of strategies out there to go and sell like 1 and 2 standard deviations and stuff like that. If you heard that, a lot of times, you can determine resistance and support points much closer to the market. You don't need to go so far out if you want to safely sell or get into credit spreads. So we like to kind of crowd the market a little bit, and you can get more premium by selling those spreads closer to the market, not risking so much. When you get so far away, you might take in 10 cents of credit, but you have 90 cents of risk. I mean, God, if that trade goes against you, that's going to hurt. So, I think a lot of people are selling options too far away from the market, and when you come up with good fib closer to the market, you get more premium for the sale, right? So that's it. Um, then when those Bigkahuna trades set up, like I said, I think GoPro is very quickly. We actually have the trade on right now. I'm looking to add to that. Gold has worked beautifully. We just squeezed so hard off the lows with all the volatility that we've seen, and CMG is another one that we're looking. So I like to have those working in the background. Yep. Byron, can you show us the first Elliott Wave chart that had the fibs? Yep. Sure. Let me just get the PowerPoint up. Again, there's the offer right there, guys. If you want to get involved, tradinganalysis.com/pub. And let me scroll back here. Oh, my poor computer. She's about 5 years old. It's my favorite trading computer, and I think it's about time. First chart with, oh, it's so struggling. Sorry, guys, pretty slow here. It's loading up, though. Mike, target for MO. Yeah, let me see. I don't know if I can even pull charts up. Looks like this guy's struggling. Um, Byron, which one? First Elliott Wave chart that had fibs. Which market were you looking there, Byron? There's a few of them. Not the GMCR trade. Okay, perfect. Get it on the record. All right, no problem. Okay. This is a God, I don't know. Probably, I don't know, Sam. What kind of? I should know. This is it's some trading computer built from Falcon. Good trading company. It's the computer's done really well for me. But probably time to go. I think Omnility is pretty heavy. So again, this might be the chart you're looking at. Yep, exactly. Okay, perfect. So yeah, good questions there. So let's just go to Facebook then. Okay. So again, the two biggest corrections right there. So you got blue dot high there, blue dot high there. Okay. So you get that's your first correction, and then you get two blue dots there, right? So it makes it so much easier when you have these indicators just kind of showing you where the corrections are. So if you could just take the total distance traveled of this guy right here, slice it up by your fib, and then project it up from the lows, 38 and 61. Those are usually your stopping points, okay, for a wave 5, the end of a move. And then you're going to combine that with the distance of wave 1 up from 2. So you're using the same tool, you're just doing it in two different locations. So you're doing wave 1 up from 2, and then you're doing waves 1 through 3 up from 4. And you're starting to look through the fib projections, okay? And that tool is available on every charting package there is, right? Thinkorswim and eSignal and TradeStation and MotiveWave and anything else you guys use. So that's going to wind up being the top, right? And as I said, there's going to be times where you do need to counter trend trade the market, right? And a really good way. Also, another thing I like to do for this kind of situation is if you don't want to wait for the market to get up to that point, what you can do is you can trade it to the long side. And we actually have a Facebook trade going now that's like this. So if you think that the market is going to go up to about $120, you can buy like a 110, 120 call spread, right? And if you really are confident that the market isn't just going to exceed there because you can count your 5-wave move, you can also sell a call above and decrease the cost of your debit spread, right? So if you buy a 110, 120 call spread for $2, go ahead and sell a call above your fib resistance up here. Maybe you sell it for 75 cents. So then your call spread becomes just $1.25 because you're only looking for a wave 5 move. And that's a way you can significantly reduce the cost of your call spread, right? So, a little bit more heavy stuff there. I certainly understand that. But again, these kind of trades to make 3,600% kind of made for a nice 2015. It was a good trading year. So if you can get 2 or 3 of those at the end of the year, works pretty well. And, this gold trade probably keeps going because the Fed is not going to hike rates now with all this volatility. And everyone's talking about negative interest rates and all this stuff. There's a lot of shorts out there in the gold market. And this one was not hard to see ahead of time. So, these trades, they do develop. They should be mixed in with your singles and doubles, just looking for little $5 spreads. But if you can get 1 or 2 of those a year, it works pretty well. All right, guys. So hopefully you want to join us. And I'd love to do charts, but as you can tell, my computer's about to crash. So apologize about that. As I said, it's good course, very confident to offer it to you. I'm pretty proud of the way it came out. So tradinganalysis.com/pub. And we'll leave that up for just 24 hours to the end of the week. And I hope to work with you guys. All right. So check us out. And again, I'd love to do live charts, but I got to restart this thing. So I'm sorry. I know it kills me. I love doing, I love doing the live charting work so much more than the presentation. But let me see if I can kind of limp this baby through. No, but all right, guys. But anyways, hope you're enjoying the day. I know Trading Pub's putting a lot of good content out there for you guys, so enjoy it, and be sure to check us out at tradinganalysis.com. And hope you guys are having a great trading session here, great trading year. It's volatile. Hang on to your hats. Make sure your plan is in order because it's pretty wild out there. So look forward to talking to you guys soon. All right. Thanks, Raleigh. Appreciate it.